And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Sunday, August 20th, 2023. I am going to begin with the S&P 500, the ES, and the first thing that many of you should notice is that I have done a labeling change. And after some discussion and a couple of questions from subscribers, it came to my attention that, well, it is a very strong possibility. I had it in the back of my mind as an alternate. And after careful looking at it and rethinking this particular section, which I felt did kind of fit in with an expanding triangle for a wave 4, after it was brought to my attention that, well, wave C should have taken out wave A, not necessarily a rule, but one that continues to show even on that expanding, because C should expand and then E expand behind that. So not that it was that great of a difference, but I factored that in, and the fact that it still could be a diagonal coming down into a small wave 5 to finish minute wave 1 here. Initially, I put minute wave here 2, here, minute wave there, I should say, at 45.52, and then, but it's just going to drop it down 1 degree. So minuet 1, minuet 2, minuet 3, minuet 4, ding, 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 minuet 5 to complete minute wave 1. 3 waves up, minute wave 2. Then we start on a minute third wave. Now, the other point that was made is that there was some observations that usually a fifth wave does not extend and as great a way as what we're now witnessing. And that part I don't necessarily agree with. I do think that a third wave, or excuse me, a fifth wave can extend, and it can extend as long as wave 3 is not the shortest wave out of 1, 3, and 5. So there aren't any rules associated with the technicality of wave 5 extending several times. And in this case, it really only extended within the internal third wave thus far. We've still got the fifth wave to go. So everything in that respect was not in question for me. What became in question was just the location of where 1 and what the internal was counting out to be. And on a minute degree, I was having a little bit of trouble, but I was willing to just let it play out and then see what took place. Now, having made that change, what it does suggest, again, is that we're not done with the minute third wave. And by the way, the change is on both the S&P and in the NASDAQ. So we're not complete with the minute wave 3, which leaves that to still complete, then a minute 4 and a minute 5th before we get to minor wave 1. So that the downside nature of this whole move is, I believe, going to be much greater than what many people would be looking for. That, for whatever reasons that they have, are still kind of holding on to an upside narrative. Now, the other thing that goes is with the intensity of the downside and the fact that it just is very continuous, begins to nullify, begins to just shift out of the picture the alternate view that I had for one day, flipped over to preferred status, took back and apologized profusely. In any case, that within that alternate count that we would be finishing a minor fourth wave and not a minor first wave. Now, the fact that this is all shifted down in terms of degree, in terms of 1, 2, and this is only finishing up a minor third wave, it would place that minute fifth, or excuse me, minute fourth wave much lower in the S&P and much lower in the NASDAQ. which of course then draws into question the validity of that type of a move against the larger picture. So here again, what we have, just to recap quickly, the high remains in place at 46.34, completing that primary B. So what we've got coming down is the start of a primary C wave decline. So it's going to be a larger decline that should take us at least through the end of the year into the first quarter, maybe even a little bit longer. If we're considering, and I'm just going to go up for those that need a little bit more detail, and go to the daily, in terms of what all of this means, is that we had the initial leg down, and this was all corrective of that first leg down. I can go out to the weekly. Let me just go one more so we can see it. There's the all-time high. That completed a very long-term cycle and a long-term wave pattern. So we just got that absolute first leg down on a primary degree. And then this was a primary degree back up, but that was the bounce. This is always expected. You finish the decline, you get another bounce up out of it, and now comes a more destructive decline. And that then puts in this sequence the first initial wave down on this level, and that's a cycle level. So what we're doing is we're just having, it's going to be actually multi-year corrective phase. And this was the first leg down. Here was the second leg up, and now we get the third leg down. That'll finish this, right? Because they're all going to come off in ABCs. So that's A, B, we get the C, that's 1, 2, and that's the third leg. And that finishes the first leg on this level. Then we're going to get the resulting rally on this level back up. And then that C wave, which is going to be further out, 2024, 2025, likely, going to be even more destructive. So what happens is, as we move out a degree, we're still putting in the same patterns as we move up from intermediate to primary to cycle. Same patterns, A, B, C. Those are the same patterns all the way up until we complete that 4, the super cycle 4. So same pattern, A, B, C. On this degree, and then this degree to finish that degree. So right now, we still are in the first 3 waves down on this cycle degree to form its first leg. Then we start the whole process over again, but in an upward fashion. Okay, so being said, here are our Fibonacci levels that are going to correspond with the depth of the decline that I believe is now in its beginning stages. So again, this is a little bit of a big picture update. So what we're looking for is that we're looking for this primary C wave down. And just to use Fibonacci sequence here, so Fibonacci numbers, the first one that we're going to look for is that wave C will be equal to wave A. And that's going to come in at 33.2775 or 33.28, we'll call it. So that's our first line in the sand for this larger section that's now just beginning. So that would be an ultimate, but I think it's going to be from that level down to 29.80. Those are going to be all the support levels. And as this continues, I will tell you how I came up with 29.80. But right now, it's not as important. More so that to kind of simplify the process of what's going on, it's a stronger decline that's going to unfold over the next several months into next year, as a matter of fact. And if this particular section took from October till the end of July, so we're looking at, we had, a total of about 11, what did I say? So this was October, and then we had 3 months, and then 7, so about 10 months. 10 months, it took 9 to 10 months for this section to unfold. This section should go faster, but we're looking at the possibility of at least 6. So we're into the beginning of 2024 before we would get down to this low. And then again, have this longer rally phase, which if this took 8-9 months, I would suspect that on the next cycle degree, which is one cycle higher, 1 degree higher, it could take between 9 and 12 to even a year and a half to finish. So first we get a nice solid decline. I would suspect it's going to go pretty quickly, which is just normal for a market, by the way. You know, it's always going to go down faster than it goes up, just the way it is. But now, taking it off that weekly, let's start bringing it back down so we can take a peek. So we can see on the daily that we've already gone from 46.34. We reached a low on Friday at 40. God, I got to open this up so I can see it, huh? At 43.50. So 43.50. So from 46.34 to 43.50. It's 200 points plus. So, and that's still within the first wave of minor degree. So here we are. These are the minor degree going to be labeled on that and that sequence. We're looking for 5 waves down within the intermediate degree. So that intermediate wave 1 is going to consist of 5 waves of minor degree, and we're still within minor wave 1. So there's going to be 5 waves, 4 more after we're done with this. 2 and 4 are corrective. 1, 3, and 5 are going to be impulsive to the downside. We got a lot of down moves coming. That's really what the end story is. So now let's take a look and see what we are figuring for this particular move. So we're within the minute wave 3 down. This I'm going to take off. I'll put it back when it's ready. And I believe the 5, yeah, I already took that off. So within this minute third wave, there are going to be 5 waves of this degree, which is minuet. We've done 1, 2, and 3. 3 we finished on Friday. So remember, 5 waves. Wave 2 corrects wave 1. Wave 4 corrects wave 3. We're inside that 4th wave correction. What's the potential of that 4th wave correction? Well, it's already kind of gotten up to above the 4th wave of 1 lesser degree, which is Elliot always told us. That's kind of where you start to look for like a 4th wave. A 4th wave usually finds its terminus, its endpoint within the price territory of the 4th wave of 1 lesser degree. We're looking on the minute, so we're going to be looking for the sub. And the sub is right there. Now, if we were to put in Fibonacci, which we can, but those would be retracements now, the Fibonacci retracements would tell us that we are also not too far off, because the most common retracement here is going to be 0.382, which is right there. So 0.382, right now we're buffeting up against 0.236, which, yeah, you know, would just show us that the weakness in the market is very existent. And if we don't get too far above this, which right now it's kind of bonking its head, a fairly decent open. We opened, we're up 37 at the start of Globex here, but you know, not really. It's bonking its head, as we say. We do have resistance at 43.90. And then we have resistance here at the 50 period moving average. That's the hourly 50 period moving average at 44.03. We have fib resistance, which would be pretty much in line with where the most common retracement finishes up. And that's at 44.14. So between 43.90, 43.03 to 44.14 should contain this ABC move, which is just counter. It is correcting the decline that we had from 45.18 down to 43.50. Once that's done, we're going to be looking for, and we'll label it, by the way, minuet wave 4. So we're in a minute third wave we still have. So within it, 5 waves in this magenta color. So this would be 4 in that magenta color. Then we get a 5th wave down. Now, once I do get that 4th wave in, I will be able to throw another round of Fibonacci support levels as we compare the anticipated 5th wave to this 1st wave. That is the comparison that we make to come up with those levels. I highly will suspect that they're going to come in from here and then down into here. So if just for example, I'm going to take it, let's say it gets up to 44.14. We're going to use that as our, go over and change that. This is not cast in stone. This is just a guesstimate based on just the fibs that are most common. So if I use this one, you're looking at not quite far enough. So I'm going to actually use this lower. I'm going to go right there at the 50. Now within this, we would start to look, I always have to clean these up. I keep trying. And we're going to be looking for where this 5th wave could come in. And we have, so you can start to see we're building it up. 43.16 and then 42.91. 43.16 would be a high or wave because that's the equality. And so we're always looking for the first move would be for an equality between wave 5 and wave 1. And equality puts us at 43.16. It puts in a new low below 43.50 and cleans that up. I will move that up right now. There was too much in the way and I didn't want to block the number. So that this will become a 5, and then we're going to get an additional. That would be minute wave 3. We get a minute 4th wave, which would be a little bit larger. And again, depending on where this 4th gets up to and then comes down in the 5th, the expectations for that next 4th wave would be back up into this area. Wherever this ends up, we're going to be looking for the next rally to kind of come back up into that area, but from a lower level. Now, one last thing that I can put in there, because the next one down is 1.618, and I did include it, and that's down here at 42.63. So the first one up is equality, where this next leg down will be equal to this leg. And that points to 43.16. A break there shoves the support for that 5th wave down to 42.63. And from that level, we're looking for a larger ABC up, right? Just a corrective wave. If this then becomes minute wave 3, we're again looking for a minute 4th wave, most common 0.382. But then we'll be measuring from there to wherever that low comes in. And you'll see that it all kind of fits in. We'll be looking for it to come back into wherever this 4th comes in. Now that's in the ES. So we have a little bit of work to do. I'm taking this one off because we've not achieved that level yet. So that's kind of just guesstimates, and I'm taking this one off because we've not achieved that level yet. So what we're looking for, actually, I can leave that one in, is where this can come in. And that was 44.30. That was, I just tell you right now, right below that level. So we have 44.14, excuse me, 44.14 would be the 382 level. And that's off of this. So, and that actually puts us back inside of the next wave 4, not of one lesser degree, but of two levels down. But it still is within a 4th. This is a 4th. This is a 4th. So we continue to look for these bounces to find their resistance and their completion points within the 4ths of one lesser degree. So there they have them. All right, so downside, 42.91, and then we did, like I said, once I get that in, I'll be able to fill in some of these blanks. But as far as minute wave 3, 100% we've already exceeded, and now we're bouncing around it at the moment. Next up for that, for the minute 3, would be 42.91, 42.92, into that area, plus or minus. But definitively, it needs to break below 43.50, which it did on Friday, before we find and start looking for a bottom. Then we get another rally. So again, tomorrow, if the rally isn't done, then we'll look for it to kind of finish up on the levels that we've just said, which is 43.90, 44.03, 44.14, 13.14, actually 10 to 13. So we'll look for that, and then for the decline to pick up again. So I'm not looking for any true super strength or solid rallies now for quite a while. And what does that tell us? Well, we still have some earnings that are going to be coming out next week. The big one that's going to be in everybody's mind is NVIDIA, which comes out on the 23rd. So a lot of play to come in. Moving averages all still very much in line for the market to turn and to continue lower. Let's go over and take a look at the NASDAQ. In the NASDAQ, we pretty much are dealing with the same story. And that is that we're looking for this, again, minute wave one is here. And then I have 1, 2, 3, 4, 5. So I switched it around and took it down 1 degree. And it really does fit cleaner. Let me just go to the 4th so I can show you a little bit more. So same upper level finishing wave as in the S&P. So they're both falling in line in terms of they're both dropping in a minor wave one, right? So the minute we're finishing up with 1, 2, 3, 4, 5. That produces then the first wave down of minor degree. And we'll have 1, 2, 3, 4, 5 there. And that finishes the first wave of intermediate degree, of which I'm looking for 5. And then that finishes the C wave. So we got quite a bit of decline yet to come. But remember, out of a 5-wave impulse move, wave 2 corrects wave 1, wave 4 corrects wave 3. And once 1, 2, 3, 4, 5 are complete, you get a little bit larger ABC correction before the next section of the decline. And the building blocks, and that's how it's just going to go until we're down and we've reached our levels. Now, I won't go over it just yet. I will save that one. But if I did, we have, this is still, what was this one on? That's that upside. Let me take that off. And if I go here to here to here, then here's our downsides here. Now, yes, somebody asked me actually at the end of the week, did I still see 8,000 in the NASDAQ? And yes, that is possible for wave C to get down there. But it's way too early to call because you got to see what the structure is going to look like, et cetera, et cetera. But on a Fibonacci basis, yeah, absolutely it could. We're definitively looking for a break below the October low. And that October low was 10,484. So I'm looking for that to break. If wave C is going to be equal to wave A, that's going to come in at 97.80. And then 8,000 is going to be down about there. We still have that additional. So C wave can be equal to A. I would be looking for a little bit more because this isn't necessarily flat. Pretty much almost, but not quite. So the structure itself says we'll probably get down into here to here. Now, back to the more recent activity, down on the 4-hour chart, we can see that we are dropping cleanly. There is minute wave 1, minute 2. Minute 3 needs to come in a little bit bigger than this guy. So that's pretty big, 16,062. On that top side, 0.75 will be precise. And that low is 15,146.50. So it's 916 points there to there, almost 1,000 points for minute wave 1. Kind of interesting. What's minute wave 2 or minor wave 1 going to look like? So we're looking for wave 3. There's the 100%, 14,526. Where wave 3 would be equal in length to wave 1 at 14,526. I'm going to be looking for it to be larger than, because here we are just getting ready to complete the minuet wave 4, and I still have a minuet wave 5 to come down. Again, now also, I'm going to bring this in, bring it down to the 1 hour chart. Here's the normal 14,893, and we're still up 34, 35, and it seems like the market's going to get stuck. So before we hit that, we have the 50 period moving average at 14,846. And I still think it's like what's really in the back of traders' minds is like the sell side, the sell side, the sell side. There are a lot of reports, a lot of analysis being done as to why we're going down and what comes next and what's really behind it, et cetera, et cetera. So once you can get the narrative changed, which we are seeing in the fact that it's subdividing so nice and so cleanly, that, we're just finishing up the third, and then we get a 4. And then a 5 to finish this third. And then we get another 4 and another 5. Before you know it, we're down here, maybe. The NASDAQ has been going pretty strongly down. Again, now, NASDAQ, what's it going to hang its hat on? It's looking for see what NVIDIA is going to say or do on the 23rd. And that is Wednesday. Now, last quarter when they reported, the CEO tooted his own horn and just talked about how great and wonderful, and we have the chips that the world wants, and so we're expecting second quarter earnings to be in line or greater than first. Well, last time that happened, NVIDIA zipped up 100, and it took the NASDAQ just right up through the moon. What goes along with that? The fact that it still could be a minor wave 4 on the larger picture. Now, that doesn't necessarily bode so well with what's already taking place. So, but we're going to see, we're going to see, we're going to see. It has not been tossed out the window just yet. Either that or whatever comes out on Wednesday gets sold. Those are the two choices. But in any case, what we can look for coming in tomorrow and maybe happening overnight is a continuation of this little bit of a rally, getting us up to these levels. All right, so we have resistance at 14,846. We have resistance at 14,800 to 802. We have resistance at 800 again, which is this 4. We have resistance at 855. We have at 883, which is the 382. At 14,876, we got resistance coming all the way up here. If they really want to mount this solid rally and not look back, that's what they're going to have to start breaking it without any hesitation. And that is what I actually, at this juncture, without any, guts to it, so to speak, I think it's going to be a very difficult thing to do. Now, we can take a look over at interest rates. Are interest rates done right now in terms of, we see that the bond market is continually correcting, as now everything kind of been mixed in from the refunding process. And is that done? I've looked at the bond market, and I'm afraid I'm going to have to say no to that one too. I still believe that these futures markets here in the bond and rate then has more to go, rates to the upside, bonds to the downside, before we see something. What's going on in the dollar? How is the equity market really going to look at if that dollar goes from above 104 and starts heading back up to 105, 106? Not going to be well received by the market, in my opinion. So again, we're paying very close attention to all the components, because remember what sits up at the top. Interest rates. I know I keep pounding on that one, but it's the truth. Interest rates. So we're watching mortgage rates continue to climb. We're watching new cars. Those are continuing to climb. We're continuing to watch some of the pressure being put on people because of the high interest rates. And how is that affecting them when they're having to step out? And consumer credit continues to climb. So we got a lot of things happening right now that don't necessarily support a bull market. So let's see how it all pans out. Now, that's not to say that we won't get rallies and then further decline, rallies and further declines. That is what I'm expecting. My big thing is like nothing goes straight down or straight up. So there we have it. For tomorrow, I think we need to look for 40, probably 48, 14,800, excuse me. Up in there, possibly as high as we got these numbers. 846 up to 875 to 883-ish. I mean, we're still within this fourth wave, right? Which is, in terms of the fourth wave of one lesser degree. So looking for this move is not really out of this picture. But that's 100 points from here. And that people will consider that's a good rally. That's a good rally. Downside's over. But don't fall into that. We're taking this day by day, and we're taking it according to the numbers, and we're trading technically versus anything else. Downside, right? We're looking for minuet 3. Minuet 3 would be equal to minuet. I think, where did I get this? That is the retracement. Minuet 3 would be equal to minuet 1 at 14,526. If I'm expecting it to come in larger, the next after that brings it down to 13,959. So again, what degree this all is now going to be secondary to the levels. Okay. If we're just following fibs, a minor wave 1 could come in way down here. I know what this one says, but say this third completes somewhere here, 14,460, maybe down here a little bit. And once I do get this fourth wave, I will put in another layer of fib extensions, comparing this fifth wave to this first wave, like I just showed in the S&P. But I want to be more definitive about what those levels are going to be. And then we'll be looking for, again, minute 3 ends, minute 4, minute 5. So where can minute 5 really finish itself up? Well, probably maybe 14,000, maybe just below. We'll wait and we'll see. Main story right here, additional downside is very likely before we see a stronger sustained rally phase. That's where I'm going to keep this for right now. So the next Elliott Wave update is going to be on Monday, the 21st.